Morning, everybody. It's the 6th of August. We're Signal Centre talking ball on what is Non-Farm Friday. Hope everyone's good. Steve, how are you this morning?
Yeah, not bad, mate. Non-farm Friday
Hmm.
sends shivers down my spine.
Yeah.
Um, mm,
Don't even play anymore, do we? Just sort of sit
no,
it out.
yeah, just sit it out. Don't really sort of get involved. It used to be a great thing on the floor, but now it's the algos are a lot quicker than I am. So
Absolutely.
good luck to them.
Okay. So, as we touched upon, it is Non-Farm Friday today, and economists are forecasting 858,000 additions, the most since last August, while the latest whisper number, whatever that is, among traders points to 897,000 additions. So, looking for a beat. The jump may be distorted by unusually low school-related layoffs amid hybrid and remote learning situations. That's according to Bloomberg economists. So come 1:30 today, we will find out what it's all about. And also, Federal Reserve officials will be scouring the report as they'll look for the right time to talk about more taping of quantitative easing. So we'll see what happens. A few other bits and pieces going on. Chinese tech sector again hit by state media calls for regulation. This time, People's Daily editorial called for tighter regulation on video services, so taking aim at things like TikTok. Um, on the US side of things, there's been some legal troubles for some European banks, Deutsche, Standard Chartered, and Danske, who have been sued by the families of Americans killed and wounded during the Afghanistan conflict. Claiming that they knowingly facilitated transfers of millions of dollars that provided aid to terrorists in the region. So that's certainly not a good look. Elsewhere, what have we seen overnight? So Japanese markets have managed to remain in the green despite a sharp collapse in household spending. That went down to minus 5.1% from 11.6% a month previous. And yesterday's jobless claim shows data improving across both initial and continuing claims, and obviously giving us a bit of a steer to potentially what to expect from the non-farm payrolls a bit later on today. Okay, so Steve, a bit of a holding pattern, I think, in markets yesterday ahead of the numbers today. Should we get stuck into some charts? Where do you want to kick off with today?
Yeah, I don't mind having a look at indices today. We can just highlight really what's happening over the last few days. We're at good resistance levels. This is a FTSE. And we can see the sort of congestion and the sort of levels we're reaching now. The resistance levels are at just above the 7100 level. Yeah, just I don't know. It just feels a little bit like we're going to get some sort of volatility event coming up. Just all sort of like it's pinned down, ready to explode out. Which way? Who knows? I mean, the more I think about it, the more I feel these indices are going to continue higher. We're getting regular rejections from the resistance lines, but we keep sort of like bouncing back up, and in some instances we're getting higher lows as well. So I keep sort of putting these little arrows, downward arrows, where price is rejected on the indices. But you know, you've got a major resistance levels, which when you get consolidation sideways at the all-time highs, chances are you're going to get the there's good more and more chance of an explosion upwards. So maybe if I don't be as bearish to the indices as I normally am, they will reverse, but I don't know. So yeah, it's like you say, it's all sort of like in a bit of a holding state prior to the non-farm. On the 4-hour charts in the US side of things, we're above the Ichimoku cloud, so you know the trend is still higher. We had a dip down in the Dow yesterday, but prices again reacted higher. It's the same old story. We were drawing a potential descending triangle here, and that's broken that, and it's holding above it nicely. But we have now got a nice sort of like resistance line, 44.30 in the S&Ps, a break above there, and it should lead to sort of like quite nice gains potentially up to this sort of like 4470 area, which would be the first or the next resistance before 4500 comes in as a psychological level. So yeah, looking quite positive there. China 50 still under a bit of pressure. I think this is forming some sort of bearish pennant. So this for me is the one that's really looking a little bit weak. But again, a break back above the 15,700 level, and that pattern's then negated, and we could look to see some sort of recovery in the China index. The Hang Seng is trying a little bit harder and is still in the Ichimoku cloud on the 4-hour chart, but potentially breaking above it. Nikkei has broken above it and looks to sort of have opened up maybe a sort of like a more of a stronger move to 28,300. We got 27,950 and the 28,050 levels of resistance, interim resistance really we call it. But it does look like some sort of inverse head and shoulders maybe, with a sloping sort of like neckline, and we're breaking above it now. So yeah, looks a little bit, it's obviously always a little bit difficult on a Friday with non-farm coming up, but let's take a look at commodities. We've seen the sort of like the breakdown in oil. Obviously we've got a few things going on. We've got Middle East tensions are increasing, and we've also got concerns over further lockdowns and lack of demand really for the black gold. But yeah, we've reacted off from this is the WTI or US oil. We've reacted from a low of 67.32 and accelerated higher nicely. However, in this 4-hour candle, which finishes at 11 o'clock, it's had a bit of a rejection from the 69.45 area. But overall, looks mildly positive, although we are below the 4-hour Ichimoku cloud. So there's still a long way to go. This is the one formation that I am sort of a little bit concerned about on a weekly basis. The weekly charts, obviously, the longer term charts are much more important in terms of trend and give us an idea. The shorter term charts, we can sort of like get different types of trends, against the main trend. At the moment, we're in an upward trending market, so things are positive. But last week we formed this doji candle, and we can see it. I've highlighted it here, and it's an evening doji star formation, and it has been confirmed. As long as prices stay around the sort of areas we are below the $70 level, I would say, in crude oil on a Friday close, that would be confirmed, and we would then expect lower price action next week. So you don't see these often, and it seems to have been highlighted quite nice in a nice round formation there. Yeah, so we rejected the approach to the previous resistance 76.80, and yeah, potential for a decent reversal over the coming weeks if we do close at those low levels Friday night. So Friday night closes are notoriously important. On the gold side of things, I picked up on this yesterday that I am mildly negative. I still feel we need to get a break below 1790 in gold and really retest the 1750 area before we really can kick on in a large way into this formation, this bullish flag formation. We can come back all the way to $1,600 as far as I'm concerned before I would turn negative on this stuff. So that's a $200 move lower. I would still remain mildly positive at that level, looking for a support to come in there before the next move higher, which could come in a couple of weeks, couple of months, possibly next year. So quick look at cryptocurrencies. So we're back up. The Bitcoin isn't just taking it lying down, is it? It's recovered really nicely yesterday, got up to a high of 41,400, and we can look at the 4-hour chart. It gives us a little bit better indication of how important that is. Yeah, so it looks pretty positive. We reacted higher from the 39,878 also in the last few hours. But the main reaction we saw was this trend line that we'd drawn in. We got a break below it, but it didn't close below it. So that formed the trend line. So this is pretty important now moving forward. It comes in around about 38,000, just below there today. We're in the cloud. We expect it to remain volatile again, potentially. Bitcoin is looking a bit positive. Did we really struggle to say that? But you know, you got it is what it is. On the 4-hour chart, Ethereum has formed a bearish outside candle, so that's mildly negative. A shooting star on Ripple, Cardano as well, bit of an evening doji star formation. So from a 4-hour perspective, the other coins are struggling slightly, but Bitcoin seems to be sort of leading the way. That's not a strange thing to happen, but yeah, that's about it.
Thank you, Steve. Okay, so FX really was a bit of a holding pattern, really ahead of non-farms today. Looking at the dollar index, it continues to be sort of fairly well supported in front of this support at 91.79 that we've got, which is a 38.2 fib level. Obviously saw a decent push higher on the 4th. Yesterday pretty much did nothing, opened and closed around the same level, and we're trying to push a bit higher today, so not really much to gain from that. Obviously I do expect there to be some volatility on this around 1:30 when the non-farm payroll number comes out. How I'd call it from here, just, you know, it's impossible. So if I was to offer my gut feeling, I think dollar index is probably going to move higher, but you know, absolutely anything can happen. So be careful if you're trading. That is my advice today. Looking over at euro dollar, this is potentially eyeing up 6 consecutive down days, although the volume hasn't been particularly interesting really on the downside. But since finding support down here at 117.51, obviously we saw this push higher, but we are now grinding down again to try and test this sort of neckline that we've got drawn on here on the longer term charts. So I still think lower prices will be seen here, but really we need to see a break of 117.52 in order to expect an acceleration lower. So more grinding lower. Again, I wouldn't be in a hurry to try and trade this ahead of non-farm payrolls today. I just don't see any sort of clear opportunities there, certainly looking at it from a daily perspective at the moment. I think, you know, if the number is dollar positive, then if we see a big move higher and these levels are challenged down here on an intraday basis, then I'd be interested, and that would probably set up some better opportunities next week. Euro sterling looks quite interesting. In a sense that it's breaking down through some key levels of support here. So we saw this big break of this kind of wedge or channel pattern back in April. We saw a decent push higher, but then since then prices just continue to grind lower over a number of weeks and months. I've got some support down here at 85.11. It seems to have done a pretty good job of holding over the last few weeks or so. Certainly not seen any closes below that level during that time, but yesterday we did. The first close below that level for quite some time. It said we have to go back to April earlier in the year. And now the big level to watch is this low that we posted on the 5th of April at 84.72. So looks as though we're going to get a fresh test of that. And if we do break below that level, then there is quite a substantial amount of fresh air for this to move into on the downside. So be careful if you are speculating on the long side of things with euro sterling. This is the key level that you need to be watching today. On the cable side of things, again, not really much going on. We have seen prices sort of gyrate and be quite range bound between these kind of levels, between sort of 138.74 to 139.91. Don't envisage that we'll be seeing anything, you know, much from this. Again, you know, non-farm payrolls could potentially change the outlook of that very quickly, but we'll have to wait and see. I'm not making any calls on that just at this stage. Pretty much it, really. I don't want to go into too much detail on the FX charts because they could all look a whole lot different by 1:30 this afternoon. Just be careful if you are trading and make sure you're using stop losses and good risk management on all your trades. But I'll leave it there. Okay, gun to the head trades from yesterday. What do we do? So, Steve, you went short of gold and you made 7.7 ticks on that at the 9 p.m. close, 0.77R. Back-to-back wins for you. Congratulations. I was offside by 11 ticks on my short euro yen position, so lost 0.37R at the 9 p.m. close yesterday. So, all in all, made a bit of money between us yesterday, which is good. Obviously, a bit of a lottery today with non-farm payrolls. So, what's taking your fancy, Steve? Anything in particular?
Yeah, I mean, I sort of think that generally non-farm payrolls have been sort of quite sympathetically looked at over the last year or so. So I tend to see that gold reacts lower on this because the dollar moves higher. So let me just give you a bearish scenario in gold. We've had 3 rejections of this 1833, 34 area of resistance, and the last, well, 3 days ago, that one was quite a decent rejection. We've got support coming in around about 1797, but the main support coming in at 1790. And there is potential for a fast accelerated move today, especially on the back of non-farm payroll. You'll get that follow through. So I believe, I believe I can fly, but that's got nothing to do with it. I am going to go short of gold. Now, where's my target? Obviously, my target is around about the 1750 area. So I'd like to get a 3-to-1 trade out of here if I can. Selling 1799.14 and let's have a 16 tick stop. 1600 ticks on this. Oh, an extra naught. I hope it doesn't collapse that far. Target is 1751 spot 14. The stop is at 1815 spot 14. I wish I'd make the stop a little bit higher because it does get that volatility spike just before the figure, and I could get taken out and left high and dry while the market says sayonara and says goodbye. But we will see. That's what I'm going for. I'm going short of gold and looking for that volatility move this afternoon.
Lovely. Okay, I'm going to take a look at euro yen again. So this is a daily chart, and the reason I was selling yesterday is it's trading this corrective channel. Found some resistance at 130.02, pretty much to the tick. And if I look at what happened on my intraday setup yesterday, so I was selling here, which was at 129.79. Little bit of a push lower initially, but then it spent most of the day offside, unfortunately. But it looks like it's moving again lower today. So I'm going to have another stab at this, but I'm going to go with a tighter stop, just above the highs that we posted yesterday. So selling now at 129.70. Stop loss at 130.03. Oh no, Steve.
Oh no.
My R isn't 2-to-1.
Joking. Can't have it, mate.
No, I
Sorry.
have to tighten the stop loss.
Oh no, now you're going to get stopped out.
Oh no, right. Stop loss is inside a round number as well, 129.98.
Oh, schoolboy errors all over the shop. Shit.
Target 129.03, 2.3 R targeting on that. I needed to just move straight down from here with no checking back. Let's hope so anyway. Okay, so numbers today. We do have as we said, non-farm payrolls at 130, expected to, well, this is a different number actually. This is from IG. They're expecting payrolls to rise to 926,000 from 850, while the unemployment rate is expected to fall to 5.7% from 5.9%. Also at 130, we have the Canadian employment report. 20,000 jobs expected to have been lost. And then at 3 p.m. we have some more Canadian data. This time the Ivy PMI index is expected to fall to 70 from 71.9 a month previous. So all eyes on non-farm payrolls at 1:30. Anything else to add, Steve, before we wrap up for the week?
No, just be careful out there. Don't trade non-farm payroll and have a good weekend.
Yeah, indeed. Right. Thanks, everyone. Take care.
Cheers.